Jio IPO 2026, India's biggest digital bet, DRHP analysis, Mukesh Ambani's next big move. What if I told you that one company today serves more than 524 million customers? A company backed by Mukesh Ambani, a company in which Google invested, Meta invested, Saudi Arabia's sovereign wealth fund invested, KKR invested, Silver Lake invested. And now this company wants to enter the stock market through a massive IPO. But here's the bigger question. Is Jio merely a telecom company? Or is it secretly transforming into India's largest artificial intelligence and digital technology platform? And why does the DRHP reveal that Jio wants to use IPO proceeds to repay debt instead of funding expansion? What are the biggest opportunities? What are the hidden risks? And could this become one of the most important IPOs in Indian capital market history? Stay till the end, because I will also explain the most surprising numbers hidden inside the Jio DRHP that most investors will completely miss. Hello everyone, welcome back to Corporate and Securities Law Compass. Today we are decoding the draft red herring prospectus of Jio Platforms Limited, filed on the 19th of June 2026. This is not just another IPO. This is a proposed listing of the digital backbone of India. When most people hear Jio, they think of mobile recharges and telecom services. But after reading the DRHP, one thing becomes very clear. Jio Platforms wants investors to see it as a technology company, an AI company, a cloud company, a digital services company, and not merely a telecom operator. Let's understand why. What exactly is Jio Platforms? Most people confuse Jio Platforms with Reliance Jio. They are not exactly the same. Think of the structure like this. At the top sits Jio Platforms Limited. Under it sits Reliance Jio Infocomm Limited, popularly known as RJIL. RJIL operates the telecom business. But Jio Platforms owns a much larger digital ecosystem. According to the DRHP, Jio Platforms offers mobile connectivity, fixed broadband, cloud services, cloud gaming, cloud computing, cloud storage, smart home solutions, enterprise digital services, IoT solutions, private 5G, artificial intelligence products, AI assistants. Now ask yourself, does this sound like a traditional telecom company? Not really. This is why investors may compare Jio not only with telecom companies but also with technology platforms. And that distinction can significantly impact valuation. Remember this point because later it becomes extremely important. But if Jio is such a powerful company, why does it still need an IPO? Let's see. The IPO structure. The DRHP reveals something very interesting. This is a pure fresh issue. No offer for sale. Let me repeat that. No offer for sale. Existing investors are not cashing out. Instead, the company itself is raising fresh money. The issue consists of up to 270 million equity shares. This is generally viewed positively because funds flow into the company rather than existing shareholders exiting. Now, here's the real surprise. The company plans to use the IPO proceeds primarily for repayment or prepayment of borrowings of Reliance Jio Infocomm Limited and general corporate purposes. Many investors expected aggressive expansion, but Jio's first priority is strengthening its balance sheet. This tells us something important about management's capital allocation philosophy. The massive scale of Jio. Let's talk about numbers, because the numbers are absolutely staggering. As of March 31st, 2026, Jio customer base, 524.4 million users. That's more than the population of many countries. During FY 2026 alone, net customer additions, 36.2 million. Think about that. Many telecom operators globally don't even have 36 million total customers. Jio added that many customers in just 1 year. And scale matters because scale creates more data, more customer insights, more cross-selling opportunities, more AI training capability, more monetization potential. This is one of Jio's strongest competitive advantages. But huge customer numbers alone don't make a great company. What really matters is profitability. And that's where things become even more interesting. Financial performance decoded. Let's examine the financials. Revenue from operations. FY24, 1.09 trillion rupees. FY25, 1.28 trillion rupees. FY26, 1.47 trillion rupees. Revenue is growing consistently. Now look at EBITDA. FY24, 549 billion rupees. FY25, 642 billion rupees. FY26, 763 billion rupees. But the most shocking figure is EBITDA margin, above 50%. Let that sink in. Many telecom businesses globally struggle to generate such margins. Now look at profit after tax. FY24, 214 billion rupees. FY25, 261 billion rupees. FY26, 300 billion rupees. PAT margin above 20%. What does this tell us? Jio is not merely growing. Jio is growing profitably. That is a very important distinction because many technology platforms can grow rapidly but struggle to generate profits. Jio appears to be doing both. The hidden AI story. This may be the most underrated part of the entire DRHP. The document repeatedly refers to AI assistants, AI enterprise solutions, AI-enabled platforms, autonomous technologies, digital transformation. Now think strategically. Who has access to one of the largest digital customer bases in the world? Jio. Who has access to enormous amounts of data? Jio. Who has deep financial backing? Jio. Who already controls connectivity infrastructure? Jio. This creates a unique opportunity. Jio is trying to position itself at the intersection of telecom, cloud, data, AI, enterprise services, and digital commerce. If successful, the future valuation story may be driven more by technology and AI than telecom. Global investors have already bet on Jio. Another fascinating part of the DRHP is the shareholder list. Look at the names: Meta, Google, Saudi Public Investment Fund, KKR, Vista, Silver Lake, Mubadala, General Atlantic, TPG. These are not ordinary investors. These are some of the world's largest technology and private equity investors. Why would they invest billions of dollars? Because they see value beyond telecom. They see a digital platform opportunity. And this is one of the strongest validation signals available for public investors. Biggest risks investors must know. No investment is risk-free, and the DRHP clearly highlights several critical risks. Risk number 1, spectrum and license risk. Without spectrum, telecom operations cannot function. Risk number 2, cyber security risk. Serving more than 524 million customers means data security becomes critical. Risk number 3, technology obsolescence. Failure to keep pace with AI, 6G, and future technologies can impact growth. Risk number 4, regulatory risk. The telecom sector remains heavily regulated. Risk number 5, high capital requirements. Continuous investments are necessary for network expansion and technology upgrades. Investors must understand both the opportunities and risks before taking any investment decision. After studying the DRHP in DP, my conclusion is simple. This IPO is not merely a telecom IPO. It is an IPO of India's largest digital ecosystem. The investment thesis rests on 5 pillars. Massive customer base, strong profitability, artificial intelligence opportunity, digital platform expansion, Reliance ecosystem support. However, investors should also closely monitor valuation, debt reduction plans, regulatory developments, future monetization of AI initiatives. The biggest question now is, will the market value Jio as a telecom company or as a technology platform? That answer may determine the future trajectory of this IPO. Call to action. What do you think? Will Jio become India's most valuable technology company? Or is the market already pricing in too much optimism? Comment your views below. If you found this detailed DRHP analysis useful, please like, share, and subscribe to Corporate and Securities Law Compass. And don't forget to press the bell icon because we regularly decode IPOs, SEBI regulations, Companies Act provisions, and major corporate law developments. Thank you for watching. See you in the next video. Warning. Disclaimer. The information provided in this video is solely for educational, informational, and knowledge-sharing purposes. The content is based on publicly available information, regulatory filings, draft red herring prospectus, DRHP, annual reports, stock exchange disclosures, SEBI regulations, the Companies Act 2013, and other relevant sources available at the time of recording. This video does not constitute investment advice, financial advice, legal advice, tax advice, securities recommendation, solicitation, or an offer to buy or sell any securities. Investors are advised to conduct their own independent research and consult their financial, legal, tax, or investment advisors before making any investment decision. Views, opinions, analyses, estimates, projections, and interpretations expressed in this video are personal and are intended only to facilitate understanding of the subject matter. While reasonable efforts have been made to ensure accuracy, completeness, and reliability, no representation or warranty is made regarding the correctness or adequacy of the information contained herein. Investments in securities markets are subject to market risks. Past performance is not indicative of future results. IPO investments involve various risks, including but not limited to market risk, regulatory risk, business risk, liquidity risk, and valuation risk. Please read the draft red herring prospectus, RHP, prospectus, risk factors, and other relevant offer documents carefully before investing. Neither the presenter nor the channel Corporate and Securities Law Campus shall be liable for any loss, damage, or consequences arising directly or indirectly from the use of information presented in this video.